Chapter 9.2, Journalizing Cash Payments Using a Cash Payments Journal. In 9.1, we journalized payments using a purchases journal, and that's pretty much when we purchased merchandise on account. That's the only time we're going to use that purchases journal. Now, in a term of a business, we're going to use our second out of our 5 special journals, and we're going to journalize cash payments. So in other words, we're going to use our cash payments journal. So in the lower right hand corner you can see that the cash payments journal, notice it sets up very similar to what before, but notice that the special amount columns are slightly different. We have an accounts payable debit, we have a purchase discount credit, and we have a cash credit. We also have our general ones that we'll use for various things, but for the most part you're going to be paying cash. So if your indicator here now is you're paying cash. If you pay cash, you're going to be using your cash payments journal. That's kind of your indicator. So and then on top of that, column 5 will always have a number in it. Column 5 will always have a number in it. So this operates very similar. So let's take a look at a kind of a transaction, and we'll talk a little bit about that purchase discount credit that I know that you're probably like, what is that? I don't know what that is. We'll talk about that. That is a new account that we'll use here. So on November 1st, we paid cash for a telephone bill. So our cash payments journal is going to work pretty similar to what we've seen before. We're going to put our November 1st. What is our debit? Well, our debit here is going to be a utilities expense. That's our telephone bill. We wrote check 241, so we're going to put $16 in the general debit, and then once again column 5 will always have a number in it in the cash payments journal, and that's $16. And that's how you that's how you enter a transaction very easily for your cash payments journal. Now let's take a look at a little bit of a harder transaction here. We paid cash on account to the Pro Shop, $22.50, covering purchase order $367 less a 2% discount. So what this transaction is basically saying is, earlier we bought merchandise on account from the Pro Shop, and so in our purchases journal right now you would see a transaction to the Pro Shop for $22.50. Well, they offered us, remember the term section in 9.1? Well, they offered us a term where we could receive a 2% discount if we paid ahead of time, or if we paid by a certain date. So we're going to take advantage of that discount, and that discount is what's called our purchases discount. Now that you're going to see 2 things here: purchases discount and trade discount. A purchase discount it's a purchase discount when the discount happens after you have bought the merchandise on account. After you've bought the merchandise on account, that's a purchase discount. In this case, we've already bought it. The indicator that we've already bought it is that P367. So we're now paying for the merchandise we bought on account. So if it happens after we bought the merchandise, that is a purchase discount. If the discount happens at the time we're buying the merchandise, so you don't see a P367 in there, or a purchase invoice number, that's a trade discount. We'll talk about that. Purchase discount acts as a contra purchases account. It lowers the book value of the purchases. It also gives us the objective evidence to show everybody what we're doing and why we're not paying the full amount, in case there are any questions from the auditors, from the shareholders or stakeholders. So take a look at our 3 accounts that we're going to use. And this, first of all, to figure out our purchase discount, we need to make sure that we take our purchase invoice amount, in this case, which is $22.50, times the purchase discount rate, which is 2%, which will give us our purchase discount of $45. Next, we'll take our purchase invoice amount of $22.50 less that purchase discount of $45 we just calculated, so the cash amount paid after the discount is $22.50. So before we bring it to the journal, let's tee it up a little bit here. So we're going to use our accounts payable, the Pro Shop, obviously, because we're going to be lowering the amount of money we owe someone, so we're going to be decreasing our liability. We're going to use that purchase discount. Remember, that is a contra purchases account. Purchases have a normal balance of a debit. A contra account is going to have a normal balance opposite of their partner account. So in this case, it'll have a credit normal balance. And then we're going to use cash, obviously, because this is our cash payments journal, and we are paying cash. So if we take a look at this, how much do we owe the Pro Shop? Well, we owe them $22.50. So we need to make sure that we are reducing the amount that we owe them, because we don't want to put that $22.05 in the amount that we're owing them, because then our records will indicate that we still owe them $45, when in reality is we don't. We've paid them in full. Then our purchase discount. So how much of a discount are we getting? Well, we're getting $45. Okay, so obviously my left side, my debit side equals $22.50. My right side is $45. Well, the debits don't equal my credit. So how much cash did I actually pay? Well, I paid $22.05. And if you look at here, this is why T accounts become nice, because once you have them, you can see your left side and your right side. So that's going to be our accounts we're going to use. So let's just bring them right over to the journal. November 4 was the day of the transaction. My account title in this example is going to be the Pro Shop. Now notice I don't have to write accounts payable the Pro Shop, because my special amount column will have accounts payable debit, and I know that that's going to go to there. So my C241, my accounts payable debit in this case is $22.50. I'm just taking them right over. My purchase discount credit is going to be $45, and my cash credit is going to be $22.05. And that's how we would enter that transaction. Now, let's take a look at another transaction. We're going to pay cash on account to the Athletic Center for $25, covering purchase order 362. No cash discount was offered. So in this case, we didn't pay in time, we didn't get a cash discount. So how would we enter that in? Well, November 9, we're basically going to take the Athletic Center, because that's our accounts payable debit. We're going to go C244, accounts payable debit of $425, and the cash was $425. When it says no cash discount was offered, we're not going to enter that purchases discount credit column there. Only use the purchase discount credit when we take advantage of a purchase discount. Once again, a purchase discount happens after the sale, not at the time. So once again, only a purchase discount is recorded. Trade discounts are not recorded in a journal, just the discounted price. Okay, so that's a key thing. Purchases discount happen after the sale, and that's a key. So let's take a look at one last one. We paid cash to Tennis City for merchandise with a list price of $68.50, less a 50% trade discount. Less a 50% trade discount. So I'm going to use my purchases, because we purchased merchandise on account. We didn't purchase merchandise on account, we purchased merchandise for cash. Okay, so purchases are a cost account. Remember, they act very similar to an expense account. So they're going to have a debit balance and then cash payments will have a credit balance. But how much was the worth of our purchases in this example? If you said $68.50, we didn't calculate the trade discount. You calculate the trade discount at the time of the transaction. Okay. Remember, if it was a purchase discount, we have a different story, but this is a trade discount, so we're going to calculate it at the time of the transaction. So we're actually going to record $34.25, because it says in the transaction less a 50% trade discount. Think of it like you go to a store and you have a coupon. Okay, are they going to ring you up and you have a $20 coupon, you buy $100. If you go to the store, buy $100, give them the $20, are they going to take your $100 first and then give you your change back, or are they going to charge you $80 first? They're going to charge you $80. That's very similar to what a trade discount is, but just on a business-to-business level. The amount of cash we paid? Well, we paid $34.25. So let's take it to the journal, and basically we're going to put November 13th. We're going to put purchases. Now, once again, we're using purchases here because we are not purchasing on account. We're paying cash for merchandise. So paid cash for merchandise is our purchases account. That's your indicator. So we'll put $34.25, and then my cash credit is $34.25.